Happy Wednesday, everybody. We are so excited. And there's really nothing better to talk about in the middle of the week than all about that money, money, money. And who better to talk about money with us today than our good friends over at Quartermaster? And that would be Don Rasmussen, who is a certified tax coach, and his partner in crime and son-in-law, Nick Hebert. And of course, my favorite person on the planet, Dr. Ray Foxworth, president and founder of ChiroHealthUSA. So we are so excited to get started today to talk about how you can make sure that you get that loan forgiveness on those PPP loans. So Don, all yours.
Well, thank you, Chris. Something that we talk a lot about when it comes to tax planning is it's not how much you make, but it's how much you keep. Well, in this particular case, we're going to talk about it's not how much you receive, but how much you get to keep. So there's been some changes with the forgiveness guidelines. And so we got Ray and Nick on here and Christy. So we're going to talk about that today. We're going to walk through it today, but I wanted to cover a couple of things. First of all, our lovely Miss Pelosi with her mask on. So the House actually made a proposal here about 2 weeks ago for a $3 trillion package. Now, the Senate has said that they're not going to pass it based on the way it stands because pretty much everything, including the kitchen sink, was included into this bill. And so there's going to be a lot of debate and a lot of wrangling, I guess is the best way to say, to get something finalized. I know the Senate's actually proposing their own, but I was sharing with Ray earlier, there's a lot, we're working with a lot of clients, a lot of chiropractors around the country, and I probably have had in the last week somewhere close to 80 or 90 phone calls with chiropractors talking about specifically about the forgiveness. And the one thing that we're hearing, and Ray, you and I were talking about this earlier, is there's a lot of concern because a lot of states won't allow certain employees to come back, like LMTs and certain ones who are working in these offices because of the shelter in place and the other guidelines that come into place. So Marco Rubio actually released this morning on Twitter. He said virtually everyone agrees that the 8 weeks needs to be changed. So they're looking at maybe extending that out to 10 or 12 weeks. And what he did say, as he says in here, the only question is, will getting it done be blocked by demands we make other changes to PPP that don't have the same level of support? So meaning that, in other words, if they add a bunch of stuff onto it, it's going to delay extending it. I don't have any doubt in my mind that the 8 weeks is not long enough, that they're going to probably go out to 10 or 12 weeks. So just let you know, we're going to talk about as the law stands right now. And then, of course, expect that to be extended. I don't know if it'll happen this month. It'll probably be in June before they actually get something approved. So the reason why we asked about doing this webinar is because this past Friday on May 14th, the U.S. Treasury gave us finalized information on loan forgiveness. And so there was a 11-page process or application. About 3 pages of it is explanation. The other 8 pages are actual documents that have to be completed. So I'm just going to kind of walk through here, and then we'll just have kind of some conversation. In the case with you, Ray, and your chiropractic practice as well as Chiro Health, I know that you applied for PPP and received it, and so I think you'll probably be a great one to ask some questions. But as the rule stands right now, you have 56 days from the date that you receive the funds into your account. Not when you sign the documents from the bank or the lender, but when the money actually lands in your account, you have 56 days. So if you receive it on a Monday, it's going to be 56 days, which will land on a Sunday. So just kind of keep that in mind. This is extremely covered period or payroll costs, and I get this pretty much on a daily basis. So payroll costs are considered paid on the day the paychecks are distributed, or the ACH is originated as well. But this is the key. Payroll costs are considered incurred on the day that the employee's pay is earned. So let me give an example. Today is the 20th of May. And let's say, for example, you received your money on the 15th of May and you had a payroll that was due on the 15th. You cannot use that money to cover that payroll. The only day that would be part of that potentially would be one day of the 15th. So there's going to be some accounting going on in this process, because everything that they're addressing right now, because there was conversations, is it accrual or is it cash basis? Well, they made it very clear that the day you incur that expense, and that expense could be payroll, that could be rent, that could be utilities. Because as we know, our payroll is in the rears. In other words, we're paying for those workers who have worked the last 2 weeks or the last month or last week, and then we're paying them after they've already worked those hours. So that's the reason why there's been a lot of confusion on this here. We've had a lot of questions. Can we go do back pay? I talked to a doctor down in Miami today who said, listen, we cut our pay back in April, us personally, the owners, and can we get reimbursed? And the answer to that question is no. So if you want to get reimbursed, not officially can you receive that. And so also for all you DCs that either are at 100,000 or greater on your W-2 wages, you are capped out. So whatever the dollar figure is, just figure this up here for that 8 weeks as it stands right now. You take whatever it is. So let's say $100,000, divide it by 52 and multiply it times 8. That's the maximum that you would be able to pay out for the payroll costs. Any questions on that, Nick? I know that you get those questions as well, or any thoughts on that?
Yeah, that's one of the big questions that we get. Believe it or not, the government has made this a little confusing somehow. And so, yeah, that's one of the big questions we got, because there wasn't clear indication on that at first. And on the 14th, of course, we got that information stating it has to be incurred during that time period. And so that was important for a lot of people to understand. A lot of people who work with us had questions on that. So that was a big one. As we go, there's a few other questions that I think we see a lot of people have over and over, and I'll just kind of pipe in and make sure that we get them covered as we go. But yep, that's a big one.
Sounds good.
Don, I have a question.
Go ahead, Ray.
Part of what triggered the need for this webinar, that was the rule that was put out. But are you anticipating that 8-week period is going to be relaxed? Is that what we're hoping will happen? Because many employers either laid off, cut hours, or if their businesses were closed by the state or local entities, then they would not have had their employees back in that subsequent 8 weeks from the date of funding, which makes it nearly impossible to expend those funds within that hard 8-week deadline. So is that what you're anticipating we'll see from Congress?
Oh, absolutely. Yeah. So Marco Rubio mentioned that this morning in his tweet. So I absolutely do believe that. And, the big thing is it'll make it much easier to get 100% of this forgiven. And I'll talk about the other tests that they have. But, like you said, Ray, if you can't bring staffing back, how are you going to be able to meet that 75-25 rule, which is 75% of it has to be used for payroll costs, and only maximum 25% can be used for the other things we'll cover here, or non-payroll costs here in a second. Now, one thing to keep in mind, and this may apply to you or may not, but so let's say, for example, the 8 weeks or 10 weeks or 12 weeks, whatever it is, if your payroll extends, in other words, let's say, for example, your 8 weeks ends on the 15th of June, and your payroll doesn't pay till the next week, you can still get that amount forgiven. In other words, you can still reimburse your payroll account, even though you actually don't run the payroll until a week later. It's just whatever happens within that 8 week or 10 week or 12 week period is going to be the factor. Again, we expect it's going to be extended. We just don't know how soon that's going to happen or how many weeks that out. I know a lot of folks, quite frankly, Nick, and Ray, is they're getting down to their week 7 already, and their nails, they're biting their nails. I know I've had some conversations with people who just reach out to us to help them. What do they do? Because as it stands right now, the law is 8 weeks. And so it's kind of between a rock and a hard place. But as it stands right now, like I said, it's just 8 weeks, and we expect that to be relaxed. So again, as I said earlier, for those $100,000 or more, you will be capped out at $100,000. And so again, you're going to be, it's about $15,800 and some change is the maximum you can receive during that 8-week period.
Don, we had a lot of questions pop up just then because you had mentioned W-2, but not sole proprietors. Can you explain the difference there between paying yourself as a W-2 and a sole proprietor?
Yeah, great question. So A lot of our DCs out there, if you're not an S corporation, let's address if you are an S corporation. It is your W-2 wages that is considered, not your dividends from your S corporation or your profit. Now, if you are a Schedule C, if you're a an LLC filing as a Schedule C, it's going to be your net profit on your line 31 of your Schedule C. That's going to be the number that you generally you use to get the loan, and that would be generally the number you're going to use to get it forgiven. So we'll talk about documentation here in a second, but that's a great question, Nick.
Thank you.
So let's talk about non-payroll costs. And so I was actually on the UVCA Doc Talk yesterday and today, and this question came up twice. So I'm going to definitely want to address it here. So what is non-payroll costs? So let's talk a little bit about that. Your mortgage. If you own your building, the payments of the interest, not principal or prepayment or anything such as that, can you do? It's only the interest on the mortgage on that building. That's what's forgivable. And then if you don't have your own building, it's going to be the rent. And of course, as it states here, February 15th is really kind of that trigger time. So whatever you had in place on February 15th is what's going to determine the forward progress of your forgiveness. Now, I have a lot of DCs who own their building who have not been either they've not been paying themselves rent, which is a whole nother tax conversation, or they don't have anything in writing. They don't have a lease agreement. They don't have any type of paper trail. So you'll definitely want to make sure that you have a lease agreement that is dated, again, preferably when you started doing so, but if not, at least earlier this year, have a lease agreement in place, because you're going to have that documentation to present to the bank and to SBA for forgiveness, as you'll see here in a second. Here's the one I highlighted here specifically, and that's covered utility payments. What is a utility? That's pretty broad definition. They specifically said electricity, gas, water, transportation, which we'll talk about in a second, telephone, and or internet access. So pretty much anything to operate your business. So transportation would be fuel, as an example, for if you have a business that is driving trucks or whatever the case is. So that would be an example of what you would be able to include in there. And so for our DCs, maybe you have a company car that's owned by the business. Potentially, you could actually have the fuel written off there. So that's what we have as far as definition of a non-payroll cost. Again, I've stressed this before. Go ahead.
We've got some specific questions about internet, our phones, things of that nature. For those of you that might happen to use Vonage or what's called a voice over IP, any cost that are related to that, whether it's the phones, whether it's the per desk unit that you pay, and even for your internet access, not just for the phone, but literally for all the piece, anything that you're being billed for internet access would be included in that.
Yeah, no, that's a great one thing I wanted to point out about that, Ray, too, is that a question came up about cloud services. So let's say, for example, for your website or your cloud services, that's not included based upon the feedback we received. But anything for VoIP, like Ray was saying about your phones, your internet, anything like that, they're certainly covered. Any other questions on that part? Nick, anything that you've seen come in through our help desk?
Well, this was a bit of a recent addition, the explanation of this. So we haven't had a lot other than kind of the VoIP question, and some people pay for storage or some extra services like that, and they're wondering if they could pay. But now that this explains it, it's kind of easier to understand.
Yeah, and just keep in mind that it cannot exceed more than 25% of your loan. Okay, so just if you spend 85% of your money for payroll and only have 15%, that's fine. That's actually preferable. You just can't spend more than 25% for these non-payroll costs.
Don, if you'll allow me here, since we're talking about other costs, a question came in. I've heard this from several docs. I use a payroll processing company, a PEO, and so those employees are co-employed. So the cost for managing my payroll that I pay to that company. The question was, do those costs count? And from what I've read, correct me if I'm wrong, they absolutely do cost. That is part of your payroll expense. Is that accurate?
Actually, that's not accurate. So the only sorry about that.
Hey, no. Hey, I'm reading stuff put out by so many different resources,
Yeah.
and it is that's one of the who was it? Abraham Lincoln that said that you can't believe everything you read on the internet.
Yeah. Well, and the reason why is that that would come from your operating account generally, to cover those costs. But they're specifically stated in their wages, commissions. Oh, and that brings up another point. I hear a lot of questions about, can I put a bonus on there for myself? Well, again, it's very clear, and as far as the definition, it's got to be wages, commissions, salaries, and or tips. And that's kind of in the frame part. Now, we'll talk about this in a second. It includes retirement. And so if you had a 401k, a simple plan, a cash balance, profit sharing, that 8-week period, that's going to be included. And if you have a group health insurance is a payroll expense as well. But it has to be, I want to stress, it's got to be the group plan, and it has to be just the payroll, probably the employer's portion of that. And so just the employer's portion of the group health insurance is part of those forgivable amounts as well. Great question. All right, so the big 3-letter word or 3-letter acronym, I guess, is full-time equivalent employee. I can't tell you the confusion that this has created since this whole thing began. Because there's 3 tests when it comes to forgiveness. Is that 75-25 rule, 75% for payroll, 25% for non-payroll. Then you have 2 others, what's called the full-time equivalent headcount and the full-time equivalent salary test. So up to this point, when they first released the regulations and passed the law, it stated just to go refer back to the IRS code of what a definition is of an FTE, which ultimately was 30 hours or more would be a full-time, and less than 30 hours would be part-time. Well, I would say simplified it. It makes it easier for everybody else, is they now have changed it that if you have 40 hours or greater, you are one FTE, one full-time equivalent. If you are less than 40 hours, then you're considered a half of an FTE. So it takes away a bunch of calculations, and it makes it real simple. If you're a 40-hour-a-week DC out there or more, then you're going to be a 1 FTE. And then, of course, less than that would be a half. And so that just keeps things real simple. We don't have fractions or anything. It's going to be either a half or a full. Now, I will tell you just some feedback I've received from this group I'm a part of, that if you are salary, say, for example, like yourself, Ray, that you would be 1 FTE. You may work, 32 hours a week. I expect you do more than that, but let's assume you only do 32 hours a week, but your salary, I would say that that's going to probably fall more into the 1 FTE based upon the mindset. But again, the rule of the law is 40 hours or greater. Any questions on that? That's generally a big one.
Yeah, we do hear a lot about this, Don. It's probably the biggest question we have. And you may cover this, so if I'm still on your thunder, let me know.
Okay.
But, the biggest question I hear around this and what we're seeing is employees can't come back because there are still stay-at-home restrictions, or they're non-essential, or they don't want to come back. We have so many people with employees that are making more money on unemployment plus the $600 that they're choosing not to come back to work when they're offered. And that's impactful to people's FTE, or it's viewed that way. Can you talk a little bit about that? Or
Thanks for bringing that up, Nick. I mean, I can't tell you the hundreds of times we've heard that. So here's the rule that came out a couple weeks ago. It was actually in the FAQ, I think number 45 or 46 from the Treasury Department. It says specifically, if you make a formal offer, and I'm going to stress to you why I would suggest doing that in writing, not just an email, but you make an offer for employment and that employee declines it for any reason, then then you get an exemption on the FTE headcount. So that would be to your benefit. I can tell you a few scenarios I've heard of. One said they were scared, which may be legitimate. One, just didn't want to come back because he moved away to be with his girlfriend. So again, whatever the reason is not relevant. If they sign, and I would say, like I said, put it in writing, in a written form, not an email, because an email they could come back and say, well, someone else was on my email and responded. But you have them sign off, accept or decline, have them sign off and return it back to you. Now, I had one question come up yesterday. What happens if they don't return back the form? I would say I would do it certified mail or somewhere where they've signed for it. If you have any concerns about that happening, because it is the burden of proof falls upon you to get that forgiven. Matter of fact, when we talk about documentation a little bit, it specifically states that if you are requesting an exemption, the FTE waiver, then you need to have the documentation showing that you made a goodwill offer for that position and that they declined to come to take it back. Now, that's number one. Number two, you are not required. I was on an SBA call last week. You're not required to hire back the same person, okay, in that position, or they don't even have to fill the same position. So let's say, for example, you have a CA who says they don't want to come back. So you find someone else to replace them for their FTE. They don't have to be a CA. They could be an administrative person or office person. So that's the big thing, and particularly for LMTs, which we hear that a lot, licensed massage therapists. Again, it doesn't have to be an LMT that you hire back or put in that position or in any position. It's just hitting that head count. Great question, Nick.
Don, I'd like to make a quick point on this and recommend those that didn't attend the webinar done by Diane Hartman, myself, Steve Conway, and Dr. Munchman about a week ago. Hopefully you doctors realize that when an employee files unemployment and you're the employer, your expenses for unemployment go up. It's called your experience rating. Mm-hmm. So twofold, I'm not an attorney, but don't practice, human resource law. That's not my area of expertise, but according to the experts that we did have on, you absolutely should send that offer in writing and have it certified mail, return receipt requested, because if they do not come back, I encourage you to contact your state unemployment office and let them know that they refused employment. That will stop their unemployment. And you're not doing this to hurt that employee. But as Don said earlier, it doesn't matter what you make, it matters what you keep. And the first time I ever had unemployment filed, even though we were 100% in the right, we lost the case. And it cost me over $3,000 the next year in increases in my state unemployment funding. So understand, it's not just, they didn't want to come back to work. If they're filed under your clinic and that's the last place they worked, you get dinged for that financially.
Yeah, no, that's a good point. And I failed to mention it. Yeah, they will lose their unemployment benefits if they decline to come back. And matter of fact, in the certification under the forgiveness application, it states that the SBA has the right to share this information with the Department of Labor. So they're going to talk. And so whoever declines to come back, now I did have one probably 2 days ago, that they have a heart condition. Their doctor recommended not to come back. I just said, listen, make sure they decline it and then put that with it. That way they're, when it comes to unemployment benefits, they may be able to get a waiver or something like that. But that's the exception to the rule. We're just finding a lot of people say, listen, I'm making more staying home than coming back to work. And it's unfortunate, but that's the way they designed the system. And on that same note, the House proposal, the bill that they proposed last week, actually wants to extend that from July to January of next year, that extra $600 a week. So unfortunately, it takes some incentives away from going back to work. But I think with the teeth that the Treasury Department put on here, that listen, if you don't accept the position, then you will lose your unemployment benefit. So I think that's a good way of getting people off of their sofas. So let's talk about the reduction safe harbor. So this is a lot of conversation comes up about, in our state, we can't bring them back. I've heard a lot of interpretations from some CPAs and attorneys out there. Well, fortunately here, the Treasury has put some clarification on what a safe harbor is. That's that magic date of June 30th as it stands right now. So the way that's calculated, not to get too deep in the weeds, you have two options. Number one is you can look at who you had on your employment that you had to let go between February 15th and April 26th. And then, of course, as long as you restore them by June 30th, then you get that safe harbor. Okay. So ultimately, like I said, if you had to lay them off, let them go for whatever reason between February 15th and April 26th, as long as you restore back to your full-time equivalent headcount by June 30th, then you get that waiver. So there's been a lot of some debate on, okay, is it the average during the 8-week period? That's nowhere in the guidance. So it's not about an average of keeping your FTE average through 8 weeks. Absolutely does not. It just says as long as you have them back by June 30th. So I've had the question come up, well, how about if I hire them June 29th? You know, again, I'm not here to give you legal guidance, or I'm just saying here that's what the guideline says, is that no later than June 30th they're hired back as the law stands right now. Of course, we can expect that to be delayed out if they give you that 10-week or 12-week time frame as well. So some documentation, just keep in mind, when it comes to forgiveness, when you look at that application, the documentation list is pretty extensive. So I want to specifically talk about the FTE. Now, how do you determine your baseline FTE? There's two different time periods. So you can look at February 15th of last year through June 30th. You can use your head count then, or you can use January 1st of this year to the end of February of this year. Those are the two dates. And so what we recommend to our clients is look and see, based upon that 40-hour or above or below FTE equation, look and see which is the least amount of employees that you had. Was it last year from February 15th to the end of June, or was it earlier this year? Okay, so that will help create your baseline of what's going to be your test when it comes to the FTE. So, and you get to elect that, either one of those. And documentation, they're going to want 941s, state and quarterly business and individual employee wage reporting, unemployment insurance tax filings. And so that's going to be the big thing, is going to be documentation to be able to justify that. Other required documents for payroll, you're going to have bank account statements. Now, from the get-go, we've always told everybody, put this money into a separate bank account. Do not commingle it. Because what's going to happen, of course, is you have to present these documents to the SBA. Also in that, as I told you earlier about the Department of Labor, they do have the ability to share information with Uncle Sam and other divisions as well. So you may or may not want to have all that detail out there for other eyes to look at. But ultimately, my concern is not so much that as it is keeping things clean. By putting that in a separate bank account, and you present those statements that only apply to that 8-week period, then they can see the money deposited and just the exits. And so you have all the paper trail to back up that money coming out of that account. Tax forms for the periods that overlap. So again, it could be payroll reports from if you use ADP or someone like that. Of course, tax filings, 941s, quarterly business and individual employee wage reporting, unemployment insurance tax filings, and of course, payment receipts, canceled checks, account statements, documenting the amount, the employer contributions to health insurance and retirement plans as well. So let me slow down a little bit here. What is included is everything for the exception of your FICA, your employer portion of your FICA. That 7.65 is not part of the forgiveness. So, and I talked about this in one of the last webinars we did through Chiro Health, talking about all the processes. Just exclude that out. If you don't know what that is, get with your payroll company and they can tell you what that is also. That's the reason why we tell people don't have your payroll debited out of your PPP account, because when they debit that, they're going to debit everything and just gets things real muddied up. But again, if you have an employer health insurance program, retirement program, you'll need to have documentation for that as well. Non-payroll, and I highlighted this, documentation verifying existence of the obligations, services prior to February 15th, and eligible payments from the covered period. So you have to show that you had it in place prior to February 15th, and then of course the documentation from then on. That could be, again, your mortgage interest payments. I'm not going to read through all these here. Of course, we'll provide the slides here for Chiro Health. But again, these are going to be your bank statements, canceled checks, When it comes to lease payments, same thing I said earlier, you need to have your lease agreement, receipts, canceled checks, verifying the payments. And then, of course, utility payments, same thing. Copy invoices from February 2020 and those paid during your 8-week period. Canceled checks, account statements, verifying those eligible payments. So those are the big things. Is documentation is going to be crucial. Now, there are some things that you're going to be required to maintain, but not required to submit. So what this just means in a nutshell, that if there's any question on your loan about the forgiveness, they can come back and request this up to 6 years later. So just like with taxes, where we recommend that you keep a hold of them for 7 years, this one here is a 6-year. So you want to make sure you have your documentation of each individual employee, the salary and hourly wage reduction calculation. Of course, if you have employees that make over $100,000, you'll need to make sure you have the documentation showing that. Any refusals, as I said earlier, that if you had a job offer and they were refused, if there was a firings for cause, voluntary resignations, written requests by an employee for reductions in work schedule, all that needs to be documented, because ultimately the burden of proof falls upon you, the employer, or you, the borrower. So, of course, there's some worksheets that you're going to see here in the application, the FTE reduction safe harbor. And again, you have to hold on to those for 6 years after the date the loan is forgiven or repaid. So just keep that in mind. So some of the problems of getting the forgiveness of the loan that we found is budgeting. Again, my conversations that I've had over the last week and a half is, how do I make sure this is done properly? So again, there's a lot of different calculators that you can download off the internet. I think the AICPA might have one as well. Of course, we have one as we'll talk about here in a second. But how do you budget through that process? Then secondly, we see is tracking all the incoming and outgoing expenses, with source material. Banks unclear about the forgiveness process. Let me bring up one other thing. The one thing about the Treasury Department, they give guidelines to the banks, because the banks are going to be your frontline forgivers, if you want to call it that. So they're going to have this information. We don't know. It was the case when it came to getting the loans, as Nick will talk about here in a second. But some of them may have other documentation they're going to want to have in addition to what the SBA is requesting. So again, based upon that, there's some clarity issues as far as what's going to be required from the bank. And then, of course, determining the proper calculation based upon these new Treasury rules. So those are the big things that we're seeing that there might be an issue. So any questions currently, guys, that have popped up on the chat?
There are quite a few, Don.
Okay, go ahead.
Can you pay an extra rent or other bills?
No. Going back to the date you receive the money, so let's say it's May 15th. So that date is an incurrence. So you're incurring that expense at that time. So any previous bills, whether that's rent or things such as that, that would not be a part of the forgivable portion. Not to say you can't pay it, you just can't get it forgiven. So meaning that, let's say, for example, your rent was on May 1st and you hadn't paid it yet, but you got your money on the 15th. So half of the month's going to be forgivable. So let's say that's $2,000. The other $2,000 would come out of your operating account to cover that $4,000 rent. So I hope that makes things clear, but it is very precise in their clarification last Friday. And that is the date that you receive it is going to be the incurring date going forward for 8 weeks or 56 days.
Don, I would add the point that you made about the banks are unclear about their forgiveness process. I use a local bank here, their private banking department, and it is unbelievable how little information they were provided with all of this. As a matter of fact, I will tell you that our banker has actually watched some of these webinars to try to figure out what's going on. And it's not because, they don't have attorneys and tax consultants on top of this. There's just not clear guidance out there for them. So I would encourage anyone who has gotten a loan through their local bank, if you have a relationship with that person, definitely reach out to them and see what their process may be, because it could be distinctly different from another bank or another lender.
It's funny you'd say that, Ray. I was talking to a gentleman down in Beaumont, Texas yesterday, who's a client of ours, and he just happened to shout out. He said, you know how I found out about you? I was talking to a buddy who's a banker who had watched your webinar and recommended that we engage y'all to help us. So it's interesting to get the bankers starting referring clients over to us. Yeah.
And just as another recommendation, hearing you list out all of these documents and everything and the things that we've got to document really sounds like, oh my God, I don't even know if I wanted to get this money. The reality is, if this isn't as complicated as it sounds, you have a bill for every one of these things that you're paying. What we had our bookkeeper do is just set up a folder that said COVID-19, and we have a folder where we put our utilities, a folder where we put our payroll, a folder where we keep our bills for health insurance, a 401k. So whatever those categories are, just get receipts for those or invoices or however you pay them, and just slide them into that folder. And I mean, keep it electronically. That's a whole lot better than like I'm sure you have people come into you at tax time with a shoebox. It's a whole lot easier to come in with a box folder and at least everything, you know exactly where to put things. So,
well, yeah, it's interesting to mention that I helped a client in reviewing over their documents from Bank of America. And Bank of America actually put in there the only 3 ways they want to receive it is going to be either electronically, it's going to be faxed, or it's going to be in an overnight package. They don't want you walking down to the bank and giving them a box full of receipts. But again, part of the training we did here a couple weeks ago on this here, yeah, we suggest you set up a Google Drive or a box or a Dropbox and put everything in one place to keep it organized. And again, like we hope will not happen too often, but I expect it's going to happen for a lot of other business owners who are not organized. They're going to bring those boxes down to the banker, and the banker just, that's the last thing they want to see is what a lot of accounting firms see every year. So.
Yeah, you think you're going to go into the forgiven stack or unforgiven stack?
or we'll get to you later, because they only have 60 days to approve it or decline it. And so just think about this. They're going to put you over on the back shelf when they have time to get to you.
Yeah.
So. Questions, Nick?
Yep. So here's another question for you that's on here, and we get a lot. So I got my loan before these guidelines were put out or before I watched this webinar, and I went ahead and paid a previous payroll that wasn't during the accrued period. Oh my gosh, what do I do now?
Yeah. Well, I'll tell you, we hear that all the time. So there's good news. It can be fixed. So it comes down to journal entry. So you would need to back that transaction out and just do it properly. So if you're keeping a journal, which we highly recommend, whether that's in QuickBooks or whether you like a spreadsheet that we provide that actually walks through you just back that out and then do it correctly and so ultimately what you're doing is you're reimbursing your operating account or your payroll account. And so you're just going to, again, pull that money back out, do it correctly, and then deposit it back in. So not a real difficult, but it's just an accounting issue. I was talking to our actuary this morning who actually got his PPP loan, and he said, yeah, this is going to be an accounting nightmare for a lot of folks. And I said, yeah, because we're getting this clarification, and a lot of people are so far into it. They might be 4 or 5, 6 weeks into it and been doing it incorrectly. So that's definitely a consideration and a concern. So,
what if you get the loan on an odd date in the middle of a payroll, and then your 8 weeks is going to end in the middle of a payroll? Is it okay to prorate that payroll and cut some checks early?
Yeah, you can. I mean, certainly now they do allow you to extend it. That was in the new guidelines as well, that let's say, for example, your 8 weeks ends in the middle of a payroll, whatever that amount is that's been incurred can be either you can go ahead and cut a special payroll or just push it off till your payroll actually happens. So you still are able to use that money for that at the end. So
good. My S Corp pays rent to my LLC, and my LLC pays the mortgage. 100% of that rent forgiven?
You just get the rent forgiven. The interest on the mortgage is not going to be applicable. It's just whatever you're charging yourself for rent. Now that brings up another question. I had someone who has a condo out in California. I was talking to yesterday. He said the assessments that they pay, do we get to, because they own their condo. And so they said, do we get to get that forgiven? I said, well, not unless you have it included in your rent. So in other words, if you bill that into your rent that you're charging your S corporation, you can. But if you don't, you can't do any, special assessments or property taxes. I had one that their landlord would assess extra taxes on the lease. And I said, well, that's if not built into your lease based upon the guidelines. It's just whatever that lease agreement says that your monthly amount is. That's the only thing you can get forgiven.
When do you have to submit the forgiveness application?
Oh, terrific question. So, at the end of your 8 weeks, our suggestion is take a week, make sure you got all your T's crossed and I's dotted. So around the 9th or 10th week is when I would, but you'll want to find out who it is at your lender, your bank or your fintech lender, whatever the case is, that is your point of contact. I've had some people say, well, listen, I got it through Cabbage and I'm not getting any response. The best thing you can do is if you're not getting a response from the lender is contact your district office for the SBA. They all have special people that work with them directly. And this was actually on the call I was on last week. I had someone who's contacted Cabbage 12 times and not got a response. I said, well, contact your district office for the SBA. They'll give you a contact person that they work with directly, and you'll get your questions answered.
Very good. We had one person who looks like they had an employee that had to go out sick with COVID-19. So they're asking, do they include her in payroll? Don, I know there's some, you or a direct family member actually end up going out with COVID-19. There's some extra type credits on a different scenario that you can take advantage of, right?
Yeah, there was a Family Leave Coronavirus Act that was passed on March the 18th. So there's actually some payroll tax credits that you're entitled to. Anywhere from 200 to 511. There's some more details to that. If you don't have a CPA or accountant who will generally figure that out for you, reach out to us and we'll be more than happy to give you some guidance and get you the instructions on that. We actually, I think, did a webinar about that at the very beginning.
Do 1099 employees count towards forgiveness?
The answer is no. Great question. Comes up quite a bit. 1099 is not part of the loan. Nor is it a part of the forgiveness. So they have to be a W-2 employee, whether full or part-time, but they cannot be a 1099. The 1099 contractors were supposed to go and apply on their own. That way there's not a double dipping. So they're supposed to apply on their own for their own loan.
Okay. We've got a few people here who have applied and never got it, and they're wanting to know if there's still hope for them to get PPP money. Yeah,
actually, that's a great question. So we get generally a daily update on PPP money that's still out there, and there is still money out there under the second wave. They're expecting to do a third wave, but right now, I want to say it's somewhere around. Anyway, it's about 70% or so has been used up. So again, there's some I would call warehouse type groups like Lendio and different ones that'll go out and shop. As a matter of fact, we've had a couple here recently that through our office that contacted us and said, hey, I haven't applied yet. Who do I go through? So we connected them with a contact we have at Lendio. And of course, there's Blue Vine, there's PayPal, QuickBooks. So there's, Square. So there's a bunch of them out there that are kind of a third party that will either, if they're not doing it themselves, they will look out to other lenders. So,
good. And there's plenty of questions, so you let me know when we can kind of respond.
Yeah.
Yeah.
So I will tell you here, we have an updated forgiveness calculator that we put together, and we've had to change it as recently as Monday. And ultimately, our goal here for our clients is to make sure that's a big zero. When you were in school, you didn't want to get a zero on your paper. We want you to get a zero on this paper. So that's one thing that we walk our clients through. We make sure of that. And so, my goal today was to say, here's how you do it on your own. You can get the 11-page application off the website from SBA, from the Treasury Department, and complete yourself. But if you need help, of course, we're here to come alongside the DCs around the country. We've helped hundreds this year and through this whole SBA crisis. And so, we're here to help you as well. So again, I'm going to leave the rest of the time for answering questions. If you do need help, you can reach out to us. We actually have a website set up specifically for this. And you go to getcovidaid.com. And then, of course, we can answer questions and assist you any way we can. Our goal, of course, is, we work with chiropractors all year long on tax planning and tax credits. But the reality is right now, it's not about that type of stuff. Right now, it's about maintaining your practice and surviving and thriving, not surviving, but thriving through this process. And I know the folks at Chiro Health and Ray and Christy and all of them have done webinars about that, about how do you function and prosper during this opportunity as we get out of this this whole lockdown situation. So anyways, go ahead with the rest of the questions. That's all I have is Q&A for the rest of the time.
Don, I'd like to share a little something here. Folks, I'm kind of a do-it-yourself guy. I have my DC like you do, and I often refer to that as my doctor of creativity. I can just make stuff up. I did all of this on my own, and right before I sent it in, I thought, you know what? I think I'll have Don at least just take a look at it to see if I missed anything. Had I not done that, it would have cost me $68,000. That is the truth. I've got my original application that I filled out, was about to send to my banker, and just had these guys take a look at it. As I want everyone to know, Chiro Health does not receive any funds from Quartermaster. We have no financial relationship with them at all. As a matter of fact, even though I just had them review mine, I insisted on paying the fee like everyone else, because I can't in good conscience say, hey, you ought to use these guys if I haven't done it myself. And I'm telling you, even though I probably know a little bit more than the average bear about this stuff, and I was fortunate to have a bookkeeper who really was able to provide me the data, you don't know what you don't know. And quite frankly, unless you have a DC and a CPA and a ABCD after your name, you really ought to consider at least having them take a look at yours and some assistance. Again, that was not, I was not asked to promote that. I just try to share with you real life experiences, whether they're good or bad. And if you're struggling with some of this, not sure quite what to do, and you're throwing your hands up and say, boy, why should I even do this? It's too complicated. Well, it's not, it is free money. Ultimately, we all pay for it as taxpayers, but don't let that frustration keep you from being able to get the funds that you might need, because as I've said before, if there is no money, there is no mission. You can't take care of patients. So take advantage of the resources like this. If you're, even if you're a do-it-yourselfer, it's just good to have somebody to double check your work.
Yeah. So, the thing about, and for those who need, we take you through what we call a 10-week process. So all of our existing clients, we've been doing that as they go along, but someone who needs help, we're going to walk through all 10, what we call it 10 weeks, because there's some things in there that, at the 9th week and 10th week that we're going to make sure verified documents and things such as that, because ultimately, as I started in the conversation on how much you receive, it's how much you get to keep. And, it may get a little bit easier if they extend it out to 10 or 12 weeks. And Ray, I appreciate that comment. That was when we went to the application and saw that, there was something significant that was going to be missing. You're not the only DC. We just had one here recently that missed some things, and we're able to get a larger loan. But I will tell you, I've heard unfortunate stories, a couple of them in the last week. One DC out in California. So when he submitted his paperwork, everything that the bank asked out there, he got a loan back for $37,500. And so I'm asking some questions. I said, okay, so how much is your payroll? And I'm figuring up through it. And I'm thinking, your loan should have been for $75,000, not $37,500. He said, I thought it was lower. And I said, well, we need to hang up now. You need to call your bank and see if, and he hadn't got the money yet, if they would recalculate. They would not recalculate it. So he lost the opportunity of an additional $37,500 because, they ran the numbers and he didn't have someone who reviewed over it. So again, unfortunate. Now it's going to be easy for him to get forgiveness because, in a matter of 2.5 payrolls, he's going to have that wiped away. But he could have had a lot more money, which could have helped his practice. And that's unfortunately a sad situation. But that's not the first or the last time I'm sure I'll hear that. All right, Nick, question, sir?
Yeah, we had quite a few questions about how the EIDL grant impacts forgiveness.
Yeah, great question. So the EIDL grant, that upfront money up to $10,000 is forgivable regardless. There's not any strings attached to it. So now ultimately it's supposed to be used for payroll and business expenses is the point there. But it is automatically forgiven. You don't have to jump through any particular hoops. Now, when you go in there to do the new application for forgiveness, it does ask about your EIDL money that you did receive. Next question is, I had one call yesterday that besides that, they received an offer for an EIDL loan of $150,000. And his question to me is, can I use this to go buy a practice? And the answer is no, you can't use that 7B money for that. They do have other loans that you can use that for. That 7B money, in other words, now we're not talking about the grant, we're talking about the next phase, which is a more complex and thorough underwriting process. That money can only be used for business expenses. So you have accounts payable that you hadn't paid, fixed assets, again, payroll, rent, things like that, that you're not double dipping. In other words, you can't use that money for the same 8 weeks that you had under the PPP forgiveness. It had to be other weeks that were not included. So great question. And for those who haven't received their 7B, so there's 2 different phases. In phase 1, which is prior to April 15th, if you were already in the system, you may have already received your grant. And then again, eventually it could be 4 weeks, 6 weeks later, you're going to get go through that process of underwriting and get an offer there. They did cap it at 150,000, even though it says 2 million on their website. They have capped it at 150,000 going forward. In the beginning, I had a client who got 163,000, but now they've limited 150,000. Everything I'm seeing now for that 7B EIDL loan. But and that one there is one you have to do payback. There's no forgiveness on that. It currently is 3.75%, and you can have up to 30 years to pay it back. Again, that'll be up to the loan officer and yourself as to what kind of terms there are. And there's a 1-year deferral available for that as well. So good question.
Yeah, very good. Christy, I can see you're upset I'm stealing your question job here. I may end up taking.
I'm sorry, Christy.
Oh no, Nick can go right ahead. I'm just sitting here trying to mark them as we answer them.
Hey, Christy.
Yeah.
So I was going to ask you a question. Let me close this out here. Sorry about that. Yeah. Okay. Good. So the questions that you've been getting in, since the last time we did a webinar, I know you'll send those to me. Has there anything that specifically stood out to you during this process?
Bonuses paid during the 8-week period. I've had a lot of people ask, can they pay hazard bonuses to meet that 75%? Can they pay themselves a bonus? Because some of them, I think, are concerned that they're not going to hit 75% of that amount with just their regular payroll expenses in that 8-week period.
Yeah. So what I've been telling all of our clients is you wouldn't want to put a line item as a bonus because that is not part of the definition of wages or in that category of payroll. If you're going to, if you are going to increase it, a modest increase is not going to hurt. I had one DC says, I want to give, myself a $50,000 increase in pay. That one there is going to throw a red flag, number one, but you're also going to be capped out at that 15,800 and some change for that 8-week period anyway. So you can never exceed that anyways. But I talked to a DC this morning who, in her particular case, her part-time employee generally would work, 10, 12 hours a week. She's only working 8 right now. She said, so can I add a little bit more to mine? I said, yeah, within reason. I think that's just keeping the red flags out.
The other question that comes up a lot too is what payroll taxes are part of the forgiveness and which ones are not?
Yeah, for the most part, everything but your employer portion of your FICA, your 7.65%, your Medicare, Social Security. That's the only thing that's not allowed to be forgiven. So your state unemployment taxes, all the employees withholdings is all forgivable. So that's state and local income taxes is that's on employee wages is forgivable.
Okay.
Good questions.
John, what happens if somebody doesn't hit the FTE requirements? Let's say they had 10, they can only get 6 back.
Yeah, okay? So if you get down to probably June 30th, and you don't hit that FTE, is that what you're saying?
Mm-hmm.
Yeah. So there's a penalty, and so there's actually a calculation on the application that will determine what that penalty is. So let's say, for example, you spent the 75% during that time for payroll, that was accomplished, but you don't meet your FTE headcount, then you're going to be penalized. And on our calculator, actually, we figure out what that percentage is, so that way there you'll have an idea of what that dollar figure is.
What if somebody had to do a repair during the 8-week period on something important like an HVAC? Is that something that could potentially fall under non-payroll expenses?
No. Unfortunately not. Now you could, as a matter of fact, they address that in there. You can't use it for, even your 7B, you cannot use it for those type of things as well.
Christy, have you seen any other questions coming in? I think you're on mute.
Yeah, I see a couple of them. What happens if I have 10 employees and now only have 6?
Yeah. So if you have 10 employees and as long as you can get back to those 10, now again, look at the FTEs. And so whether it's a 1 or a half, ultimately you just have to, if they're under 40 hours, you just have to, if you have a half of FTE, you just have to make sure you get them replaced by June 30th. Again, they don't have to be doing the same job. But again, we expect this to be extended. So I'm just going based upon the guidelines as it stands right now. It could very well be pushed out. So if they give us 10 weeks or 12 weeks, I believe the FTE safe harbor will most likely get pushed out as well.
I believe that's going to happen because there's places right now, even if you wanted to bring like an LMT back, you couldn't. They're not allowed to come back to work. And that's just going to there's going to have to be something regulatory that changes there that allows for that kind of thing to happen and you not be penalized for it.
Hey, Ray, how's that happening down in Mississippi? Are your LMTs still forbidden from working on people?
They're back at work.
Or are they? Okay.
Yeah. And I'm hearing interesting in some states, massage therapists, if they were independent practices, they could not work. But if you were an LMT employed by a chiropractor, you could work. So because it was in the delivery of a healthcare model that wasn't as affected like the LMTs were. If the chiros were able to work and they have massage therapists, many states allowed them to work.
Very good.
There's a question here about there's a question here about the EIDL. Someone had asked what that was. If I recall correctly, that's the economic injury disaster loan. And the question was, is that in any way subtracted from the PPP loan forgiveness?
Yeah. So your grant is part of that forgiveness, but your EIDL loan itself does not impact your PPP at all.
I think some confusion comes around that because you apply for both of those things with one single application.
Yeah.
When you apply for the EIDL, you are considered. There's a checkbox you check on the SBA website that says, consider me for up to $10,000 advance. And that's the grant people were speaking about. And there's no communication in that. You'll just see it hit your bank account if it's given to you. The EIDL itself, that's the same loan that's been around for many, many years. If a tornado hits your area and it's considered a disaster zone, then you can apply for a 3.75% loan to help out in that situation. It's a much longer process to get that loan. A lot of red tape. You're going to be dealing with the SBA advisors on that, but you apply for both of those through the SBA website. And the only piece that fits into what's the Coronavirus Bill Act is the grant money that was added onto that.
Well, I think if there's any other questions, we'll wrap up. I think we're at the 2:00. I think that's our deadline today. So, Ray, you had a question. I think you were going to ask me as well, or
it actually was covered previously.
Okay, cool.
I had one more that I saw just pop up like 3 or 4 times.
Okay.
So if you've already paid your utilities, say on the 1st of the month, you get your PPP on the 18th of the month. Do you prorate your utilities paid for that month?
Yes. Yeah. Based upon the way it's written. I know it seems a little archaic to think that you have to go in there and figure out the days, but that's just the way they have it structured.
No, I do have one other that I think might affect a lot of practices. And it was, if I have an LMT, but they're a contracted employee, can I include them in my FTE?
If they're 1099, no.
Thank you.
Good question.
Yeah, and there's a lot of those questions coming through as well. If you have contracted or 1099 employees, they are not part of your payroll expense for the
Correct.
forgiveness.
Yeah, they have to receive a W-2 to be part of the FTE test or forgiveness.
Okay. All right. Well, we're going to wrap it up at 1 minute after the hour. If you have additional questions or you are watching this as a webinar, your questions to the chat box. They are emailed directly to me, and then I directly send them to Nick. And he or Don will send me a response and we will get back to you. But please understand that after these PPP loan webinars, we get thousands of emails. As no understatement, we try to consolidate them so we can, make it easier for the two of them and then I send y'all out the mass responses. So just please be patient with us because it may take, especially with the holiday weekend, it's going to take us a couple of days to get back to y'all, but know that we're not forgetting about you because I flag every one of those, make sure that we respond to them. So just be patient. And this is our last webinar for the week. We do not have one on Tuesday, but we will be posting one for Wednesday and possibly Thursday of next week. So just be on the lookout for a webinar coming up, letting you know what is up and coming in the news of COVID-19 and how we can help your practice so you can help your patients. I hope y'all all rest, relax, and have an amazing holiday weekend because Lord knows you all deserve it. And we will see you next week. Bye.
Thank y'all.